So you just found that car of your dreams. The salesman's taken you into the finance office and you're expecting an interest rate around 5 or 6%, but the finance manager says the best deal he can give you is 24%. 24%, you say? I've got great credit. I pay everybody on time. How's that possible? Well, it turns out that there's an error on your credit report. Somebody's reported a collection or a charge-off, and now your credit scores dropped from 800 to a 650. What are you going to do? Well, this video is going to teach you what to do and how to correct inaccurate information on your credit report. Hi, I'm Hugo Blankingship, and this is my partner, Tom Christiano. We're your fair credit report lawyer, and our job is to help consumers like you fight the credit reporting agencies, get their credit corrected, and move on with their lives. Tom, what sort of credit reporting areas do most consumers see?
So most consumers see errors in their account history section of their credit report, including inaccurate payments, inaccurate identity theft accounts, and perhaps even bankruptcy accounts that were discharged or not included in a bankruptcy at all if your account is mixed up with another consumer, Hugo.
But some consumers go and they try to hire a credit repair company. What do you think about credit repair companies?
Traditionally, when someone calls me on the phone in the office and I ask them, have you worked with a credit repair company? It's because they don't take the time to write detailed dispute letters. They don't take the time to really get down and prove that the account is inaccurate. They try to game the systems in order to have accurate information removed from a consumer's credit report.
Well, one of the other problems with credit repair companies is that the credit reporting agencies, Experian, TransUnion, Equifax, they're on to them. And what they receive is usually about 500 letters, all on the same address, all coming from the same address on the same day. And as soon as they get that, they mark the consumer's account as credit repair clinic. And as soon as they do that, you're not getting it fixed. Now, what's the first thing a consumer probably needs to do?
Well, the very first thing you need to do is get a copy of your credit report. The best way to get a copy of your credit report is from annualcreditreport.com. After you receive the copy of your credit report, you want to review the name for any names you don't recognize, because that could be a sign of identity theft, the account addresses, and the account history and accounts that are on your credit file, as well as any inquiries. Upon noticing any inaccurate information, that's when you're going to have to spring into action and draft a good credit dispute letter. Hugo, what do you think makes a good credit dispute letter?
Well, you can go online or you can call them, but we think the best way to do it is to actually draft a letter. And one of the things that you can do when you draft a letter is you can attach some documents. So if you have some evidence or proof, maybe you didn't pay late and you got proof that you paid them on time, or maybe you're trying to explain to somebody that you didn't open the account. The more documentation that you can attach to your dispute letter, the better the letter is going to be. But what happens to these letters?
Well, once you mail your letter to the credit reporting agency, it takes a bit of a journey. And the first part of the journey is it's going to be scanned in and sent to India, where the outsourced processors of Equifax and Experian and TransUnion are going to review the letter and start the ACDB process.
Unfortunately, that process isn't going to be very robust. Our experience is that they're paying close to 12 cents per investigation. That's right, 12 cents per investigation. Now, when you're doing 30 million disputes a year, 12 cents, it's going to save you a lot of money, but you're not going to get much of a reinvestigation with that. What are they doing for that 12 cents?
Well, they're basically going to review the consumer's name and identifying information and attach a copy of the dispute letter to what's called an automated consumer dispute verification form and ship that onto the furnisher. Now, the problem with this process is it doesn't comply with the Fair Credit Reporting Act, because the Fair Credit Reporting Act requires both entities in the process, the credit reporting agency and the furnisher, to review and reinvestigate the dispute of the consumer. So by simply attaching and sending it along to the furnisher, they're trying to automate the process as much as possible so they don't have to independently review the information. That's really what part of the problem is when they look at the letter, in my opinion. Hugo, what do you think?
Well, the big problem is that the outsourced processors over in India or Chile and Costa Rica, the credit reporting agencies don't trust them, right? Because they're not managing them, they're not hiring them, they're not supervising them, and they don't trust them to actually make any decisions. So they don't look at your letter and try to determine whether or not they can verify that it's yours or not. They just simply send the information on to the furnisher. And if the furnisher says, I'm going to keep it on there, it's not coming off.
Right. And the reason they want to keep it on is because it helps their true customer, which is the furnisher of the information. If you think how the credit reporting process works, the credit reporting agency receives data from furnishers like banks and credit card companies, and they assemble that information. Now, the information they receive is for free from the furnishers of the information. So their only cost center really is that investigation on consumer disputes and overall computer maintenance of the files. So they have incentivized to not conduct anything more than what is arguably a 12-cent reinvestigation, because that cuts into the bottom line of the credit repair or the consumer reporting agency. Right, Hugo?
Yeah. Well, look, you can do this yourself. All right. You can send in the letter, you can dispute it, and you can try it yourself. But we found that if you really want to get it off, the first thing you're going to need to do is to hire a lawyer. Get a lawyer to help you, somebody that's experienced in this area like us. This is what we do. And we can walk you through each of the steps on how to process a consumer dispute and how to get this thing off. Tom, how does it come off?
Well, it typically comes off once a lawyer gets involved, Hugo. That's been our experience. The consumer reporting agencies actually monitor our filings, and they want to know when we file a lawsuit as soon as possible, even if it's not directly against them. They will keep an eye on what we file through the court's filing system, and then ultimately sometimes even correct inaccuracies before we even file a lawsuit.
Well, one of the first things that we get when clients call us up and they say, how much is this going to cost me? I really don't have a lot of money and I can't afford to pay lawyers. Well, the good thing is about the Fair Credit Reporting Act is when Congress enacted it, they wanted to get lawyers like us to take these cases. And in order to do that, they put in what's called a fee shifting provision. And that provision allows you as the consumer at the end of the case, as long as you win, to recover the legal fees. Well, the legal fees in these cases can be $100,000, $200,000, even $400,000. Now, obviously, the average consumer can't afford to pay that, but we don't charge consumers up front. We get paid when we get paid by the credit reporting agency, okay? So we take these cases on what's called a contingency fee or percentage fee basis, and that way you're not responsible for any of the legal fees. We get paid when you get paid.
So the Fair Credit Reporting Act authorizes three different types of damage in addition to legal fees. As Hugo, we have punitive damages, statutory damages, and actual damages, which can include damages for emotional distress. So as we discussed, the attorney's fees can be one portion of the program that the consumer can feel comfortable knowing is covered by the Fair Credit Reporting Act, but they also have the reassurance of knowing they can be compensated for actual damages. Now, actual damages can include emotional distress damages for things that happen while their credit report is inaccurate, and also for financial damages in the way of denied credit and increased costs of credit. What other types of damages do you like to see in a Fair Credit Reporting Act case, Hugo?
Well, one of the things that every consumer has, as soon as they figure out that they've got a problem, it's usually when they're trying to actually use your credit. So as we started, you're in the car dealership and you're trying to buy a car, but you can't buy the car, right? Because you're not going to pay 24% interest rate. So you've got to wait and you've got to put your life on hold. And that's very frustrating. Then you got to go through the process of sending out the letters and getting the responses back. And you're thinking they're going to fix it, but they're not. And each time you get a letter back, it tells you, yeah, we verified that this belongs to you. It gets even more frustrating. Clients have headaches. They have sleepless nights. It's very frustrating, not just for the consumer, but for the spouse and the children and everybody else that's associated with them. Part of the problem is that they don't really conduct any kind of real investigation, and they know they don't. And that's what leads to punitive damages, doesn't it?
Correct. If the more information that the entity has, the more likelihood punitive damages are going to be at issue. For example, if you're suing a bank and they've already resolved the issue and their accounting records show that you've paid the debt and it should be a zero balance, or you never paid late and they're credit reporting that you did pay late, they're going to ignore documents in their own records and then still say you're inaccurate on your credit report. It's a tragedy. And that's what can lead to cases that have significant punitive damages and a chance of punitive damages. Do you have any other examples of punitive damages, Hugo?
Yeah, when they don't do what they're supposed to do, it's not because it's a mistake. Okay. It's not just innocent negligence. It's because they knew that they were doing it and they trained these processors not to do it the correct way. And they can't do it the correct way because if you're paying them only 12 cents per investigation, there's no way they're going to conduct a actual investigation. And that's where the problem comes in. And that's why if you hire a lawyer and you get after them early, you're going to be able to set up a case that you can prove that what they did was not only violate your rights and violate the Fair Credit Reporting Act, but they did it intentionally and willfully. And that's what the issue is.
So as we talked about earlier in the video, really the key is to have a good credit dispute letter that factually is descriptive of the information that is inaccurate on your credit file, identifies the inaccurate information, and provides any supporting documentations as part of the dispute letter. Hugo, what do you like to look for when you review a consumer credit dispute letter?
The more information and documentation that they can put in there, an explanation as to why the information is inaccurate. The problem is they're probably not going to read it, but ultimately it does make for a much better case on being able to prove that they didn't do what they're supposed to do and they didn't look at what they're supposed to do. So the more information you can provide and the more documentation, the better the dispute letter.
Right. And that's why you also want to hire an experienced fair credit reporting lawyer like ourselves, because you can see the dispute letter process firsthand by talking to us and then make a dispute letter that is more likely to solve your problem or protect your valuable rights. That's what I feel like an experienced Fair Credit Reporting Act lawyer adds to the process. Hugo, what do you think we add?
Well, the other thing we add is that we've been doing this so long, we know the ins and outs of what these credit reporting agencies and furnishers like Verizon are doing and what they're trying to hide, where the bodies are buried, where the information is. So if you get somebody that's been doing this a long time and is experienced in it, they're going to cut through all the garbage and they're going to get right to the problem. And those cases tend to settle very quickly.
The other thing I think for hiring an experienced credit report lawyer is the defendants are going to hire some of the biggest law firms in the country to defend themselves. They're going to throw up roadblocks. They're going to need to be shown exactly what they did wrong. The typical lawyer doesn't have access to all the inside information that we've had access to, so we know exactly where to go to find those bodies, as you mentioned. That's one of the values of hiring an experienced FCRA lawyer is we can cut through the trips and traps that the defense lawyers like to throw in front of consumers. Hugo, what kind of tricks and traps do you think they have?
Well, I mean, they're going to file motions to try to dismiss your case. They're going to claim that they didn't have any duty to figure it out. And you've got to be able to hire somebody who can handle those motions, can get past the preliminary motions, and can explain to the court why what they did violated the Fair Credit Reporting Act. And once you get past that, then the cases can often settle.
How long do you think it takes? Do you have an estimate? I know what I think. I think it's, a few months to get a case settled.
It does. One of the things that has happened recently is once we sue somebody, they tend to take it off your credit report. Now, when they're going to figure out exactly how much it's going to cost to pay the damages that they put you through for all the months that you've been disputing and they didn't take it off, that's going to take a little bit longer. But we've had a lot of cases where we've sued one credit reporting agency like TransUnion, and one of the other ones has already seen the fact that we've sued them and they take it off your credit report. So you can get it off a couple of them very quickly.
Yeah, and the key to having your credit fixed immediately is the time and being able to get back into the credit market as soon as possible. As we mentioned, some of the damages can be actual damages related to the inability to get a credit. When you apply for a mortgage, they don't want to wait. You found your dream home, you want to get your credit score up, and you need to get moving through the dispute process. And if they're not going to fix your credit report, you need to file the lawsuit to get your credit file fixed. So we all know that credit scores can go down hundreds of points with inaccurate credit information, and that can cost you literally hundreds of thousands of dollars on a mortgage. These are significant damages that consumers are entitled to recovery for, not to mention the emotional distress of not wondering whether or not you're going to be able to be approved for the loan and where your kids are going to go to school if you don't get the new house. There's all sorts of effects of credit reporting on consumers that many people don't even realize until after they get through the process. We've had consumers we've helped that will get through the process and go, oh my God, that's right, my hair did fall out a little bit. When you're under the gun of emotional stress, you almost don't realize it because it's just your new normal. And then when you get into the case, physical, emotional things, you're like, oh my God, I was maybe a little short with everyone, or I had hair falling out, or I couldn't sleep at night. I guess it was my credit report. So what other kind of damages do you like to see in a case like that?
Well, you can have all kinds of other damages related to your credit that you probably don't anticipate, like insurance. Your insurance rates are going to go up when your credit is decreased. Also, you might find that accounts that you've had open for years, somebody does an account inquiry and sees that now your credit's dropped by 100 points. They might cancel your account. They might lower your credit limit. Maybe you had a $10,000 credit limit. You might be down to $2,000. So there's a lot of different things that can go on. So
do you have a particular case you find that you're like not your favorite case, but what case did you find most satisfying that we helped someone?
We've had a lot of really happy clients that ultimately come in and they say, oh, well, I just want you to get it off my credit report. But sometimes they end up being really kind of happy at the end of the day because some of the settlements can be rather large and they can finally be compensated for all the difficulties that the credit reporting agencies have put them through. But we've represented consumers who have been victims of identity theft, who have had problems with auto leases, who have had problems with family disputes where a family member has stolen their credit. There's a lot of different examples.
You're right. And you mentioned when we meet with the client, you can hear the tension in their voice that they've sent dispute letter after dispute letter. They've just racked their head against the wall. No one's listening to them, no matter what documentation they have or provide. And you can see and hear it in their voice, how affecting it is on their livelihood and their life. And I find it personally rewarding when we get to the end. We see them at the end of the case and where they've been compensated and their credit report's fixed and they're moving on with their life and they're in some cases moved or gotten married. And, it feels good to keep consumers moving on their financial journey by having an accurate credit report, because everybody knows your credit report, your credit is your name at this point in life, and you can't buy or purchase anything without a clean credit report. So that's what I find most rewarding when we help people.
Yeah, and we do see clients who have really moved on with their life. We one or two children in the process, and we get to stay in touch with them. And we really made some profound impacts on some of our clients and their quality of life going forward. And that's very rewarding for us.
And unfortunately, many of our clients are younger consumers because their credit is especially vulnerable. When you have newer credit, your credit is especially more vulnerable to one or two inaccurate accounts. So if you only have one credit card and you have one car loan, and then suddenly there's an inaccurate collection account on your credit report, a young consumer can make it virtually impossible to get out of the gate, or their credit is going to be so high that it doesn't make any sense to have credit with that high of an interest rate, because it would only further the inaccuracies with your credit report. So
Yeah, they talk about as being in credit jail. You have been held back because now your credit score, instead of being in the high 700s or low 800s, is now dropped to 600. It's amazing how far your credit score can drop with just one inaccurate trade line. People don't realize it, and they probably don't keep track of their credit as much as they probably should. But once you have a problem, you're going to suffer a lot of damages.
that's for sure. Credit jail is a great way to put it. And again, that's the younger consumer that is just starting out, and then you place them in credit jail, and then they're locked up. They might not even be able to get a job or a credit card to support a job. I know we've seen that fact before, where you've started a new job, you've just graduated from college, and you need to get a credit card to get reimbursed by your employer, and you can't get it. And then you have the embarrassment of got to go to a manager and say, oh, well, I'm a victim of identity theft. Or I'm a victim of inaccurate credit reporting. I can't apply for a credit card to get compensated back from the company. And next thing you know, your manager is all involved in your personal credit history, when there really was no need for it to happen if the credit reporting agency had just reported accurate information from the beginning. Those are the kind of cases that really make me sad.
Yeah, I mean, we've had some very sad stories, but we've had some very happy endings. But the one good news that we can share with you is that if we take your case, we bring you in, and you have a legitimate dispute as to what's inaccurate in your credit report, we're going to get it fixed. That's the one thing that we guarantee at the end of the case to everyone. If it's demonstrably inaccurate and we can prove it, we're going to get it fixed for you.
I agree, Hugo. If you enjoyed this video, hit the like button and subscribe to our channel. In upcoming videos, we'll discuss identity theft, inaccurate automobile leases, inaccurate utility accounts, and other inaccuracies on your credit report. In the meantime, take care of your credit and dispute any credit inaccuracies.
And we'll see you next time.